Welcome, everybody, to another QB Power Hour. I'm glad to have you guys joining us today. Our topic today is job costing in QuickBooks Desktop, and I'm going to show you a little bit about online, and we're going to be doing a deep dive today. This is an ACE-approved webinar. We'll talk more about that in just a little bit. So what we're going to be talking about, first of all, we're going to give you a quick overview about QB Power Hour and introduce you to the host, myself and Hector Garcia. We'll talk about the CPE process and the ACE credits, that this webinar is eligible for ACE if you're listening to us live, not if you're listening to the recording. Then our topics and learning objectives, we're going to be understanding some of the different types of transactions that can affect job costing, and we're going to talk about how to work with some job costing reports. So a little bit about QB Power Hour. This is a free webinar series that we do every other Thursday at noon Eastern Time. We've got the next one coming up on September 8th. I'd love to have you join me for that. And we usually cover tips, tricks, and advanced insights on QuickBooks Desktop, QuickBooks Online, as well as we occasionally cover third-party apps or some practice management topics like value pricing, things like that. So we'd love to have you put it on your calendar and join us for all of the QB Power Hours that we have coming up. My name is Michelle Long. I am a CPA in the Kansas City, Missouri area, the owner of Long for Success. I'm thrilled to be a speaker for Intuit and travel around the world helping accountants and bookkeepers learn more about QuickBooks Online. The author of several different books. You can check those out on Amazon. And I'd also invite you to join me in the LinkedIn group as well as our QB Power Hour Facebook group. Hector, you want to introduce yourself?
Hi everyone, this is Hector Garcia. I'm a CPA based out of Miami, Florida. I teach QuickBooks in my own classroom to business owners, other accountants, bookkeepers, people looking for work in the accounting industry, all sorts of people wanting to learn QuickBooks. I'm also a member of the Intuit Trainer Writer Network. I do travel and do some training. I've done a few with Michelle on the road actually. And this year and next year, I'm part of the Intuit Accountant Council. It's a lot of fun because we get to give Intuit some feedback about their product. There's my email and my Twitter handle if you want to reach out to me.
Great. Thank you, Hector. And we'd like to remind you about an upcoming event that we have coming up in October, QuickBooks Connect. It's going to be in San Jose, California this year, towards the end of October, so it is after that tax filing deadline. I really encourage you to attend. It is a fabulous webinar with thousands of people there, including accountants and bookkeepers and other pro advisors, also a lot of small business owners as well as self-employed individuals, apps, third-party apps, those developers, there's lots of them that are there, and hundreds of Intuit employees. We've got great main stage speakers talking about business and small business, such as Shaquille O'Neal and Tony Hawk's going to be there this year, and some other great speakers. They have a great concert, along with free food and alcohol for the concert, so we can have accountants gone wild. Just kidding. We're a pretty boring bunch, but we do have fun. Love to have you join us there. If you'd like to register for the 3-day conference and get $200 off, just enter that code there that you see on the screen right now. So write that down in all caps, QBC 16 events, and I'd love to see you there. I'll be speaking. Hector, you want to talk a little bit about CPE and the ACE process?
Sure. Every single episode is eligible for CPE only if you watch it live. Like if you're logged in right now, you're watching it live. And as long as you're logged in for 50 minutes or more and you answer the CPE keyword question, we're going to give you the keyword at the beginning, towards the middle of the webinar, and then we're going to ask you a question at the end. As long as those two things are there, 50 minutes and the correct keyword question, you will get the certificate. It gets emailed to you automatically within 2 or 3 weeks, and you must keep it for your own records. Now, not every episode is eligible for ACE, Advanced Certified Education, which is only for Advanced Certified Pro Advisors. Today's happens to be eligible, and your certificate at the bottom will say eligible for ACE, which you have to self-report through the Intuit Pro Advisor website later on this year when they open that up. So we get a lot of questions in, how do I report my ACE? Well, this is all self-reporting. Just keep the certificate for proof.
Okay, so what we're specifically going to be talking about in this webinar, I'm going to give you a quick review of the content that's already available in the advanced training materials, because Hector and I are covering advanced topics here, things that are above and beyond that. So I'm going to quickly review what's available for you already that you can access that later if you need to. Then I'm going to talk to you about some transactions with job costing, specifically some non-cash expenses such as the owner's time and how to allocate that to a job, or maybe you want to allocate the cost of the equipment to jobs and stuff. Then Hector's going to cover some additional job costing functions like allocating billable mileage to the jobs, inventory costs to the jobs, and then he'll go over some reports as well. Then we've got a few additional notes for you, some of the different features that are available in the different versions of QuickBooks, and some additional resources and videos that are also available for you. So first of all, I'm actually going to go in and review with you the materials that are already available for you. So once you're a Pro Advisor and you log in here to your Pro Advisor account, you'll see you have access. If you're in the free Pro Advisor program, you'll have access to QuickBooks Online. Once you earn the online certification, you have access to the advanced training materials. If you're a member of the paid Pro Advisor program, then you have access to the QuickBooks Desktop certification. It does include some information in here on some basic job costing. You'll see that here in Module 6. You can download that PDF and supplemental guide. Now, once you've earned the basic certification, then you're eligible for the Desktop Advanced certification after you have 3 years of the desktop certification. So you'll see here in this red note that it's saying, after you've done it, you have to be certified in the most current 3 years. So right now, that means you have to have the desktop 2014, 2015, and 2016 certifications to be eligible for this advanced certification. Once you have that, here in Module 4, you'll see is job costing. So Hector and I aren't covering the information that's already available to you here in this job costing module. It's already covering all the basics of job costing, such as using estimates, using two-sided items, which is recommended when you're doing job costing. Instead of just using expenses, we recommend using two-sided items, using QuickBooks to track things for job costing purposes. So you've got all these details here on some of the basics in job profitability or job costing. Here's on billable expenses, and when you have reimbursable expenses, details on those double-sided items, allocating some overhead expenses, over and under billing, controlling costs using POs, and even setting up payroll to track your job costing. Now, one of the things that's important to remember is QuickBooks Desktop, you can allocate that payroll to the jobs, and it works great in QuickBooks Desktop. That is one of the limitations of QuickBooks Online. You cannot allocate the labor or the payroll to the jobs without using a third-party app. You also cannot do progress invoicing with QuickBooks Online. So there's a few limitations. So most of the demo today, Hector's going to be doing in QuickBooks Desktop. I'm going to do a little bit of it in QuickBooks Online for you, though, because you can do some basic job costing in QuickBooks Online. So I'm going to show you a little bit of that, and what I'm going to show you will work in QuickBooks Desktop just the same as it does in QuickBooks Online. So we're going to be talking in my section about allocating some non-cash expenses to the job, such as the owner's salary. So I'm going to go ahead and get into QBO here. Let me go ahead and pull up QuickBooks Online for you. So I am in Larry's Landscaping. So Larry is a sole proprietor. So Larry does not get a paycheck, but he wants to see his time, the cost of his time, allocated to the job, because there's no actual expense. When you're a sole proprietor, you don't record your time as an expense on the profit and loss. It's not deductible. So, when he takes an owner's draw, when he takes money out of the business, which is allocated to a balance sheet account, owner's equity, it's not showing up as an expense on the job cost reports. But Larry would like to see that non-cash expense allocated to the job, so he knows whether he's he's pricing his jobs properly. You know, is he covering his time and all of his expenses? And you may have other non-cash expenses as well, such as equipment costs. Let's say you have large machinery and equipment. You want to allocate a portion of that cost to the job, or other situations where you want to allocate costs to the job, but there's no actual check being written for that cost. So there's several different things you can do, and there is a handout for you there on how to do this. There's a little blog post on that saying how you can do that. So Paul is saying that there's an app to allocate payroll in QBO. Paul, if you want to allocate labor, look for a couple of apps such as Notify or what was the other one? BillQuick from BQE. But in this case, Larry is a sole proprietor. He's not on payroll. We're not doing payroll for Larry because he's a sole proprietor. So there is no paycheck for Larry. So what we want to do is 3 different steps. We're going to do an allocation to allocate his cost to the job. So the first thing you want to do is go into your chart of accounts and set up, and in this handout, there's the QuickBooks tip, applying owner's time for job costing. That's going to show you the details of how to do that.
Remember, what we're talking about is we have a sole proprietor, Larry's Landscaping. Because he's a sole proprietor, he doesn't get a paycheck. But he wants to see the time of his work allocated to the job so he knows if he's bidding them and pricing them profitably to make a profit on those jobs. So there is a way that we can do that for him. The first thing you want to do, and you've got a handout on this, the handout shows it, a screenshot of desktop, but you can do this in desktop or in QuickBooks Online. That's why I'm demoing it in QuickBooks Online, but the same process in both of those. So the first thing you want to do is you want to create an expense account for, such as I've named this one, the owner's job cost allocation. I put it down as an other expense account. We can't record the owner's time as an expense on the P&L. We are only using this account as an in and an out so that we can allocate the labor to the job and see the expense on the job cost reports, but the expense is not actually hitting our bottom line of our P&L, and you'll see that in just a moment. Keith says reboot my modem. I did do that, Keith. It still didn't work. So first of all, set up a new account to use for this allocation. It will be 0. Things will be going in and out of there. Second thing you want to do is we want to set up a service item. I call the service item owner's time. You're going to go ahead and let it say, I sell this product, and you may or may not use this on an invoice depending on how you bill your clients. Sometimes they will bill them a fixed fee, and the job is going to be $20,000, so they're not actually invoicing for the owner's time. You need to go ahead and set that up to an income account. The key is also check the box right here to make this a 2-sided or double-sided item. It says I purchased this product or service from a vendor. In this case, we're paying the owner. So we're going to put a cost in there, and we put it to that expense account that we just set up, the owner's job cost allocation. So you set up that expense account, you set up a 2-sided or double-sided item for the owner's time. Then this is the key. We're going to enter what's called a $0 check. The check itself is for $0. You can even set up a separate bank account to keep this in a separate register if you want to, but we're going to do a $0 check. And remember, you can do this for other non-cash items that you want to allocate to jobs, such as equipment time or other things like that. What you do is you're going to have 2 things going on. You're going to post to the account, that expense account, the owner's job cost allocation, and to the owner's time. What this is doing is the owner's time is going to, they're going to offset one another. See how we have the owner's time item is positive and the owner's job cost allocation expense is negative, so it offsets to 0. I'm going to show you this in the reports in just a minute. But this is the key, otherwise it doesn't work right. If you put a job cost customer up here, you're just offsetting it to 0. So for the item, you want to allocate that to the owner. So for the two-sided item, which we use two-sided items for all of our job costing, you indicate which customer it's for. In this case, I got a job cost customer. You do not put a customer up here. Now, let's see how this looks on our report. So I'm going to go over here to Larry's Landscaping. First of all, I've got my income by customer summary report, which you can find under your reports under review sales. You'll see the income by customer summary. Here's the job cost customer where I invoiced them for $1372.50. Here's the $500 of that owner's time that I set that service item up and I allocated to the job. You'll also see that in the profit and loss for the job. Here's the P&L for this job. I've actually filtered this for the specific customer of a job cost. You'll see here's the income I did. Here's that owner job cost allocation for the P&L by job. On the overall P&L for the company, let's scroll down here and you're going to see that owner's allocation expense that I set up down here as an other expense, it's 0. So again, we did allocate the cost to the job. Over here on the P&L by job, you see the $500 cost is in the expenses for the particular job. But on the overall P&L for the company, you'll see it's 0 because if I click on that to give you the details, you'll see it goes in and out. Because remember, on that check, I have the item is positive, the expense is negative. Let's look at that again. Here I have the positive item posting a positive $500 to the expense. Here's the negative taking it out. The positive expense is putting it on the cost for that customer, then taking it back out for the overall P&L. So what this does for you, yes, it's a zero-sum check, a $0 check. It's a way for you to use items to allocate costs to the job, but it's not affecting your bottom line P&L. Somebody wants me to zero in to display the details. I did do that right here. I clicked on the 0 so you can see it goes in and it comes back out. So on your overall P&L, that is 0. Yes, I am using QBO Plus for this. Somebody wants to know how you can do different tabs. I will share a link on how you can do those different tabs in QuickBooks Online. I'll post that in there for you in just a moment. Okay, so let's review. First of all, you create an account, other expense called, in this case, owner's job allocation. You set up a two-sided item for the owner's time. So for the purchasing information, it's going to that job cost allocation other expense account that I just set up. Then you enter a check using that expense account under the account as a negative. The item, you use the owner's time item that we set up. And then what that does for you, it allocates that to the owner's job, the expense goes to the job, but it's not affecting your bottom line on your overall P&L. Okay, so I've demonstrated this for you, and you have the handout. The handout gives you a screenshot of doing it in the desktop, but as you can see, I'm doing it here in QuickBooks Online. You can do it in QuickBooks Online as well. So I hope that's been helpful for you. So somebody says the owner's time item, yes, it points to that allocation expense account. Okay, so hopefully you see that. Now remember, you can do this for other things, like let's say you have an equipment. Let's say they've got a big bulldozer or something that they're using on various jobs. You can do this for allocating equipment and other non-cash items as well. Maybe you've got an overhead allocation rate that you want to assign to the jobs. That's something that you could do with a $0 check as well. All right. So, Hector, did you notice any other questions that I missed there that I maybe should cover?
Yeah, I think one of the most common questions we get is, hey, how do we fix all the issues with being able to job cost our payroll into QuickBooks Online? And the general answer is, look, you're going to have to be using things like the check that Michelle showed you. That resource of a $0 check has so many applications. Yeah, you can allocate labor, you can allocate owner's time, you can allocate non-cash expenses. But unfortunately, at the moment, QuickBooks Online is just not equipped to do detail-heavy job costing in like QuickBooks Desktop can. So for the time being, look into apps. NoFi, it's a really good app. Builder Trends, another really robust app. Some of the things to look at, but nothing else. Michelle, I did have a part that I couldn't cover because I wasn't afraid of how much time you had, which is allocating inventory costs to jobs. So if you don't have anything else, we can switch over and then I can do just that one part, unless you have something else.
Yeah. One more thing that I would like to point out, like Hector said, that the QBO is not great for the robust job costing. Also, don't forget on the progress invoicing. There are some people who posted some workarounds on how to do progress invoicing with QBO. I do not recommend them. They are very cumbersome. They're very tedious, and clients have a very hard time actually doing that, and they wind up making lots of messes. So if you've got a client that needs progress invoicing, that wants to allocate the labor to the jobs and things like that, just look at a third-party app for them. On the other hand, if they just need to do basic allocate those expenses to the jobs and see a P&L by job or an income by customer summary like I've showed you here, you can do the basics. But for more robust, yes, get a third-party app. Also, for how to do the tabbed browsing and other navigating tips, I posted a bit.ly link there. Make sure you use all caps the way it is written, the QBOT, all caps, and then lowercase for tips. And that goes through those navigating tips for you.
So let me jump into my topic, which is going to be QuickBooks Desktop. So sorry, we're going to switch gears a little bit here, and we're going to do job costing. We're going to do job costing reports. We're going to do allocating billable mileage. We're going to talk about allocating inventory costs. So we'll jump straight into my topics, and then if Michelle comes back, she can do hers. If not, I can cover her topic. I'll try to just kind of prepare for that as I do this. Okay, so let me switch over to QuickBooks Desktop here. Okay, and let's start with just basic allocation of expenses to jobs. So one of the things that Michelle was going to mention is that in order to get any sort of job costing involved, you have to, when you create a check or when you create a bill, you have to make sure that here in the bottom part, and this is as basic as it gets in the job costing world, is we want to pick an item itself. We don't want to job cost to expenses, and there's a reason for that, mostly on the reports world. But we want to always job cost to expense to items, not expenses. And then whatever the cost of that item is, that needs to be allocated to the job here on their drop down, where it says customer job. You have to pick whatever the job is going to be. So that's, in a nutshell, that is the simplest, easiest way to tell QuickBooks, yes, I have this expense and it does belong to this job. Now, in the world of QuickBooks Desktop, because of the job costing reports, we want to compare the items versus the original estimated items. So whenever we look at the actual estimate for this job, so we're going to take a look at the estimate for this job in a second, we want to see all of the sales components in there. So I'm going to go ahead and hit save and close. And I'll double check. Michelle, are you back?
Hey, Hector, can you hear me?
Yeah, I can hear you just fine. I just started with my topic, so do you want to just...
Perfect.
Yeah, okay.
That's perfect. My power went out and it's rebooting, so you go on with yours, and hopefully when it's my turn again, I'll be ready to go.
All right, perfect. Okay. So as I was mentioning earlier, we want to be working off an original estimate. We want every line item in the estimate, and when we job cost it, we want to select the original line item when we job cost it. This is going to play a very important role in the reporting process. Now, these estimates can be invoiced in full, or they can be invoiced partially doing progress invoicing. We're not going to get into that. That's actually part of those basic certificate, the advanced certification part in job costing. So I'll refer to that. But Michelle talked about double-sided items, and that is the most important component of it. If you're working with QuickBooks Online or QuickBooks Desktop, our recommendation is to always use an item in both the income and the sales side, and make sure that the item, if it's not an inventory part, that you actually override, hit this little check boxes here, override, and make sure there is a cost component that's going to hit the cost of goods sold side, and then there's an income component that's going to hit the income side. And QuickBooks will know that if the transaction is in a check, bill, credit card charge, or expense, like in QuickBooks Online, it knows that it's going to post to this account. But if the account is in a sales receipt or an invoice, it's going to post to the income account. So that's really the important thing between the two. Now, let's talk about one of the features that doesn't get talked about very often, which is allocating mileage. Okay, so the way to allocate mileage is here under the company menu. There's a button down here called Enter Vehicle Mileage. And when I click on Enter Vehicle Mileage, it's going to give me a drop-down screen for vehicles. Now, you can access your vehicle list here under List Menu, Customer Vendor Profile List, and under Vehicle List. So your vehicle list, again, because we're talking about mileage, is going to be for vehicles. However, you can actually create any sort of asset that you're going to charge for. And it may not necessarily be mileage. So if you have, for example, if you have a forklift and you charge per hour, or if you charge per minute or whatever, you could actually essentially use the mileage function for that as well. So let me go ahead and create a new vehicle here. I'm going to call this one, I'll just call it truck, and then I'll hit OK. And then I'll create another one here called forklift, and I'll kind of show you both of those concepts there. So this is the vehicle itself. Now, also, if I am going to charge my client or charge a job for the usage of that vehicle, whether it's a forklift or a truck, I have to also create an item for that, because unfortunately, the vehicle itself is not tied to an item. So I have to sort of in parallel create an item for that. So I'm going to call this one truck usage, and I'll put here miles. And then I'm going to put my reimbursable mileage rate here, which in this case is going to be, let's just say $1.50. And that's how much we're going to charge. And then I'm going to click this little checkbox. That's if I want to log the internal cost of mileage. And let's say my internal cost of mileage is, let's say 75 cents. Okay. Then this is the real tricky part is, when I charge for mileage, what account should I hit? Well, technically, if I'm going to charge for mileage, that should be construction income, because that's part of my construction deal. But when I expense it, where is that money going to come from? So technically, it should come from the same place where you charge your car maintenance, your truck lease payment, your gas. So we're going to put here under automobile expense, we'll create a sub account called mileage. Okay, and this will make sense once we actually show the reports for that. So no, that shouldn't be the fixed asset account. It should actually use an expense account. So let me see on the expense accounts, where's my auto expense? Oh, there it is. Car and truck expense. So I'm making a sub account on the car and truck expense and hit save and close. And we'll give this a number. Okay, so when I charge my internal books, my jobs for mileage, I'm going to charge 75. If I charge my client, I'm going to use 1.5. And then I'm going to hit next here. And then I'll use here forklift usage. And we're going to call this hours. And then let's say we're going to charge for the forklift usage $350 an hour. That's when we charge our client. And let's say our internal cost, if we actually pay for the forklift when we rent it, we're going to choose maybe the same expense account that we use to pay out the people that we rent the equipment from, if that happens to be the same account. That's typically going to be under job-related costs or something like that. If it's an internal asset, it's a little bit trickier just because there's no real cash payment being allocated. But let's say that our internal cost for the usage of forklifts is $175 per hour. So then I'm going to go ahead and hit OK, and then I'll close my item list. So back, I got my two vehicle lists, and then I can now select the vehicle I want to charge for. So let's say this is going to be, let's say, forklift. Okay. And then I can say which date we did it at. And normally we charge per day. We can actually do it across a span of days, but I recommend just doing it in a single day. And for example, here where it says total miles, let's say I'm just going to charge for 18 hours of of forklift usage. Now, this is what you call a workaround. None of this stuff is intuitive, right? No one will ever figure this out on their own unless they're playing with QuickBooks for a very long time to say, huh, interesting, I could use my vehicle mileage module to charge my client for equipment usage. So let's say we're going to do here, select the job, garage rebuild, and then here where it says item, this is where we pick the item that we just selected. So we click here, forklift usage, and I'll skip class for now, and I'll skip notes. And then if I want to mark it billable, I can click that billable tab, right? So that's only if I want to charge my client for it. So I'm going to go ahead and hit save. Now, by the way, very important thing. People ask, what happens if I don't mark this billable? Will it still charge the $175 to the job? The answer is no. So this vehicle mileage is a non-posting transaction. It can only give you internal reports that we can use. Let's save this so I can show you. I can see a report of mileage just so I know what the usage is, right? So in this particular case, it's going to be based on the item that's being used. So I'm going to go ahead and mark it billable because I do want to charge my client for that, and then I'll hit save and close. Then when I go, and self-explanatory for mileage, right? So if I wanted to add mileage for the vehicle, is self-explanatory. That would just be a normal usage, right? So I can put a start date, a start odometer and an ending reading, and it will calculate it for me. And at the same time, I can put it to the job and pick the item. Now, the item is the most important piece for invoicing. So when I go invoice my client, let's go into customers, create invoice, and then I'll pick that client that I was using it for. I'm going to go ahead and hit cancel because I'm not going to use the estimate for now. And then I'm going to select my outstanding billable time and cost. And we're going to see here under mileage, we're going to see two items here. We're going to see our forklift that we're charging $350 for the usage. And then we have our mileage that we're charging $1.50 for. And then when we hit OK, those two items go in there. So this is how we charge for the items. Now, the tricky part, and this is going to be very similar to Michelle's example on taking the internal expenses that don't really tie to a payout. The tricky part is now charging the actual internal cost of the mileage to the job. So we'll do that in 1 second. So this is how we charge essentially our client for forklift usage and truck usage. So I'm going to go ahead and hit save. And the way we're going to charge the job for the usage, each week we're going to use a check. So I'm going to create a check here. And then here under the pay the order off, I'm not really going to pay a third party. So I can create a vendor here called internal equipment usage. Okay, spelling would be great if I knew how to spell that correctly. So I create a vendor called internal equipment usage, and then under item I can have my forklift usage right here, and I can say, look, I used it for 18 hours, and I will charge $175 to the job as long as I select the customer job here. But then the important part is I'm actually not really paying someone $3,150. That's just tracking internal costs. Same mechanism Michelle's going to use for charging owner's time. So on the second line, I'm going to pick the same exact item, and then I'm going to pick quantity, and here I can do -18, which will basically reverse the check. This is what's called a zero check. But the key thing here is that I have a job on the top and I don't have a job in the bottom. That way, when I pull a profit and loss, that $3,150 is going to net, and my profit and loss itself will not be charged. But when I look at my job cost reports, it will be charged. So let me go ahead and hit save and close here. Okay, so that would basically create the internal charging of the usage, and then you saw through the mileage module how we charge our clients. So let me go ahead and hit save and close, and let's pull up a report here. So let's move over to reports. I'm going to go into reports. I'm going to go into job costing. And by the way, that job costing option, it's only available in QuickBooks Premier or enterprise, in the resources, we have a slide that explains what functions are available in which feature. But if you don't have QuickBooks Premier Contractor Edition installed, it would be also under jobs, time, and mileage. And if you have QuickBooks Pro, this will work as well. But the actual option there with all the reports organized is only on Premier. But the report we're actually going to see, it's actually on Pro as well. So I'm going to click on jobs, time, and mileage. And then I'm going to click on job profitability detail. And then I'll click on that report. And then here on the drop down, I can actually pick the job that I want to see. And then I can hit OK. Okay, I muted Michelle. Okay, so you're gonna see our actual cost here. You see how our forklift usage is 3150, and our actual revenue here is 6300. And then we have a difference of 3150. That's our profit. We have about a 50% margin on this. Same thing with the truck usage. See, there's no dollar amount charged to truck usage. I would have to do the same thing and create a check. You said internal equipment usage, and then put here truck, and then I forgot how many miles it was. It was 2,000 miles, right? 2,000 miles, and then I'll pick the customer job here, and again I'll repeat this. Put negative 2,000. Okay, that way it's a $0 check. That's the key right there. And as long as I only charge one customer, I'll be good. Then I hit save and close. Okay, and then you're going to see that mileage charged to the job. That way, when I'm tracking profitability, I am, quite possibly, hopefully, tracking more accurate numbers, and at least in terms of understanding our profits. Okay, so the only invoice we created was that one that was posting for 9,300. If I actually go and pull up the job itself and grab it from an estimate, so because it looks like I created an estimate before, I grab it from an estimate, then I get the choice to choose whether I want to invoice specific line items of the estimate or I want to invoice a percentage. This is for progress invoicing. My favorite way of doing progress invoicing is the third option, is the selected items, just because it gives me a lot more flexibility in terms of which piece of the job I have completed so far. And for the next report, for the work in process report, is extremely crucial that we understand exactly where we stand as a construction company on the job, whether we're 20% done, 30% done, 40% done, because typically our payouts or our invoicing is tied to that percentage. So that's really, really important. So in this screen here, you see the estimated amount of the work that we've done for concrete. So if we know we've done roughly about, let's say, 50% of that, I can just type 50% there under current, and QuickBooks will calculate how much of the items or how much of the amount to bring in there. Let's say that we did 100% of the plans and permit, and we've did 25% of the lighting and 0% of the paint. So QuickBooks will actually calculate exactly how much you should be invoicing based on what percentage of each line item of the original estimate you are claiming as complete. So I'm going to go ahead and hit OK here. Okay, and what this will do is, and I can close the screen, this will create now an invoice. This is called a progress invoice that actually contains a history of the original estimated amount, the rate, and the total percentage of each. Now, I have a lot of clients in the construction business that don't ever even show this invoice to their customer because it becomes confusing. Sometimes they are contractually in agreement to pay in a certain way, or there are conditions in which trigger payments, and payments are not really even tied to invoices. It's really important to keep in mind that creating a progress invoice in QuickBooks is with the sole purpose of recognizing revenue, not with the purpose of getting paid. Getting paid for most construction projects is independent of invoicing. So I'm going to show you one more report that is related to this, and I think it'll make a lot more sense. So I'm going to go ahead and hit save and close. Okay, and I'll close this and I'll run another report. I'm going to go into reports, job time and mileage, and I'm going to do job estimate versus actual detail. job estimates versus actual detail. I'm going to hit the drop down here and select the job, garage rebuild, and hit OK. Okay. And we're going to see all the detailed components of the job. The first line here, estimated cost. This is what's actually on the estimate. If I actually double click on that and double click there, I actually get to see the estimate, what the estimated costs are. Now you have to have the internal cost in one column and you have to have the markup in another column in order for QuickBooks to differentiate what you plan to receive, which is a 23,000, versus what you plan to pay, which is at 18,000. The single most number in the construction, most important number in job costing or construction industry is my estimated cost of the job, which in this case is 18,590, because this will drive everything. So as you can tell, for example, in this particular job, our estimated costs are 18,000. Our actual costs are 21,000. So we're basically over our original cost. So the big question is, are we going to get paid more because we're over, or should we invoice everything we have 100%? I mean, there's a lot of really important things to kind of just stop and think about.
We did have a question. How do your clients invoice their clients for payments? Do they use something outside of QuickBooks?
Yeah, you can. So that's a great question. Very common question. So you can use a QuickBooks invoice, but it's really important that you don't use any item that posts into income. So if you create an item called customer deposits, for example, and you use that particular item to receive a payment, it won't affect your job costing, and it's going to go in the balance sheet where it's supposed to go. And then at the point that you want to apply those payments to the invoice, you just go back into the invoice and add that payment in there as a negative item, and it pulls it from there. We have another episode in which we discuss prepayments, and that's kind of what the concept is. And also, this may be a good premise for a second version of this webinar, which obviously one is not enough. Okay, so that's a really important component, is what percentage we are on the job based on the cost versus the estimated cost, and that essentially will drive how much you will invoice. So although I did an example of invoicing based on a percentage per item, which I basically arbitrarily went in there and picked a number, ultimately those percentages are driven by this specific comparison of estimated cost versus actual cost. So for example, if the original estimate, I'm just going to have to drive up the cost of this. Let's say on the original estimate, we estimated that we were going to have 18 hours of forklift usage, which I actually didn't do before that, and let's say 4,000 of mileage. And I'm going to go ahead and hit save and close. We're going to see how, and I'm going to save this, how this report is now going to show me a potential different percentage of a comparison of internal costs and estimated costs. And this difference, which I'm going to click on customize report and click on this little box here that says percent difference. And I'm going to go ahead and ignore all the revenue portion because that's actually not important for now. So this difference here at 13.2%, it's whatever should be left of that job to complete. So if you take that number minus 1, or just take the inverse of that to get to 100%, which in this case would be 86.8%, right? So 86.6% should be how much we're done with that job. And that also should be how much we have invoiced so far. Now, for the very long time, the limitation that we have with QuickBooks is the report shows like this, and you have to make that manual calculation of that 13.2. But in QuickBooks Enterprise, they added a new report called the Job Working Process Summary, probably one of the most important add-ons in the world of construction contractor and job costing in QuickBooks, and this is only on QuickBooks Enterprise. And this report actually, and I'm going to go ahead and just filter this one to just show one job. That way we're not distracted by all the other jobs that are going on. So I'm going to hit OK. So in this report, we actually see the opposite percent. We actually see the percent of completion. But we also see a really important number, the most important number in the world of job costing, which is we've invoiced $17,000 so far. If I double click here, we see that there are 2 underlying invoices getting to that 17,000. However, based on our percentage of completion, we should have invoiced 30,000. So that report tells you exactly where you are from the perspective of invoicing. Now, this doesn't tell you whether they have paid you or not. You would have to run a different report, a receivables report on the invoices or something like that. But this is a really important report to know where you stand in terms of earned revenue and actual revenue. The other another question that people are asking is, hey, if I use a zero sum bill or a zero sum expense instead of a check, would that have the same effect? And the answer is yes. And somebody else is pointing out the problem with $0 checks is that it clogs up your reconciliation screen. Really good point. All those $0 checks will show up in your reconciliation screen. So just create a separate clearing account just for those if you don't want to see them in like your main bank account. I think that maybe we should cover that. Okay, so somebody's asking, how would job costing be useful outside construction industry? I guess for some of those people that don't work with construction companies, trying to understand where this would be useful. Michelle, you got any comments on that, on using job costing outside of construction industries?
Oh yeah, there's a ton of industries that use it. I just put in there. I mean, even something like event planners and party planners, they want to track the cost for that job. Even landscaping companies, architects, engineers, any service type business, maybe it's a marketing person, any service type business can use some of the job costing features. So definitely, Tiffany says she even uses it for her practice. So go ahead and do that. And somebody else is looking for the link on that. I'll put the YouTube link in instead of the bit.ly link for the QBO tips. So just hold tight and I'll get that link for you. Hector, go ahead and do your demo quick since we're getting towards the end of the hour.
Okay, perfect. Thank you for answering. And we have 100% correct answers on this, so people are paying attention. That's good. All right, so let me go back to the screen sharing, and I think you should be able to be seeing my QuickBooks desktop screen now, or not. Now you are. Okay. All right. So the other common element that people ask for a lot, quite a bit, is if I don't purchase materials that go specifically for a job. Very common with people when people purchase 2x4s and cement, and they buy them by the bags or by the truckload, and they don't want to necessarily job cost or allocate the entire purchase to a job. So let's talk about what that actually means. So let's say, for example, I'm going to buy some materials, and I'm going to pick here one of the items here. So let's say, for example, I'm going to buy a total of $5,000 worth of materials, but we're only going to use a portion of that for a job. So the problem that most people have at this point is that they're going to have to figure out, well, how much of the materials that I'm buying are going to be for a job and how much are not going to be for a job. And then let's say, for example, it's 40/50, then they would have to come in here, make the calculation, which is very, very time consuming, make the calculation and send some of the costs to a job and some of the cost to no job at all. So one of the major challenges without that is you're not tracking for inventory. And then when the next job comes in, you're going to have to grab it from your inventory, quote unquote, which is from your non-job costed cost, and bring it back into the job with a $0 check or any of the techniques that we shown here. So this is one of the big issues that we have. So the alternative to that would be to track inventory. So let's say I'm buying $5,000 worth of wire and I use that wire quite a bit for jobs. So the way you would do it is, let's say, for example, I'm going to create an inventory item here for the wire. So I'm going to say that this is $5.65, let's say, per foot, whatever it is. I'm going to put sales price. I'm going to put 0. And then I'm going to put here, do not sell. And then I'll put here for job costing only. You're going to see kind of the dynamic of that. And that's really important that you do that. That way, the QuickBooks user is not tempted to do it. And if they end up selling it for some reason, then we're going to pick the same exact cost of goods sold account as the income account and the cost of goods sold account, because it's always going to hit cost of goods sold no matter what. So I'm going to go ahead and hit OK. And then I'll go ahead and buy the $5,000 worth of wire, which will be 1,000 feet of wire, whatever it happens to be. And then I'm going to go ahead, hit save and close. So that's just a normal purchase of inventory. But then what happens is I'm going to use up part of that inventory now for a job. For me to do that, I have to actually either invoice or do a sales receipt for it. Now, I personally recommend doing a sales receipt instead of an invoice because normally when we give a client a statement, we don't want to see an invoice that's worth $0 with a wire consumption because that's just confusing. So I'll use a sales receipt instead because typically in construction, we don't use sales receipts at all. So I'm going to click here under enter sales receipts. And then what I'll do just real quick to just make it easier, instead of calling a sales receipt, we're gonna call it inventory usage for job or something like that. That way, if we actually print this out, the people internally in the office, they know what the purpose of this sheet is. So we're gonna pick the job, I'll close that out, and then I'll pick the item here, wire, and here it says do not sell for job costing only. Oops, supposed to put sell, not see. So do not sell for job costing only, and that's just to let you know that you're not going to give this to the client. And then you're going to put here 2,000, and this is the key element. The rate is 0. The rate is supposed to be 0. There are no sales because I'm not selling the client the wire. I am consuming the wire, and therefore that $5.65 times 2,000 should now be sent to the job cost. So I'm going to hit preview. You can see what that looks like. That's going to say, hopefully, if somebody's tempted to print this and give it to the client, those indications show you that that's not something that it's not going to be a client-facing document, just for internal purposes. So I'm going to go ahead and hit save and close, and hit yes. And then when you see our report here, we see here the actual cost for this is 11,300. Wonder why that's a pretty big cost. Oh, not 2,000. It was supposed to be 40% of 1,000. So let me put here times 1,000. I guess I could have done that math by myself. 400. So I'm going to consume 400, not 2,000, because I only bought 1,000. So I'm going to consume 400 feet of wire, and then you should see that cost hit my estimate versus actual, and that allows me to see it. Now, one of the challenges here is I never budgeted for this in the first place. So what I should have done is budget for this wire in the first place. And one of the ways that we can budget for that without the client seeing it is we create a new item here. I'm going to create a group. And then I'm going to create an item group, and I'm going to call this job materials. And then what we can do is this little checkbox that says print items and groups. I'm going to uncheck that. And then we're going to put here total job materials under item, and then going to put wire. And I can put any other materials that I normally use, whether they're inventory part or maybe any other things. I can put these pieces here, and then my client is not going to see it. So whatever that is, I can hide it inside of a group and then hit OK. And then I'm going to go back into my estimate, my original estimate here. And I'm going to pull up my original estimate, and then I can come here in the bottom and pick my group with hidden items, and that group is going to open up both of my items. So in here, I can budget. I can say, well, I want to use about 400 feet of wire for this, and then there's some additional specialty materials which we haven't done yet, and we're going to have one, let's say, for 1,500. So this could be some internal calculations of materials we're going to have. And then under markup, we're going to put here negative 100%. That way it doesn't charge the job anything from a sales perspective. That way our revenue is still the same, 35,000. However, our projected costs are booked in here. And then when I show, if I happen to be using an actual QuickBooks estimate to show my client, I'm just going to see a line that says job materials with a 0 to the outside world. But internally, we actually calculated that to be, 2,260 for one item, 1,500 for the other item. So this allows me, for internal calculation purposes, this allows me to go back into that report and actually see that I consumed all the materials that I originally budgeted for. Okay, so that's it. That's the only part that I really didn't want to make sure that I missed. Let's talk about the additional resources on the email that we sent everybody with the recording. You're going to get all these links. We're going to have the recording for job costing payroll that happened in January. I recommend you watch that one. A few of you had questions on payroll. We have a recording on manual payroll. This is if you don't use QuickBooks Payroll, you use ADP, Paycheck, some sort of third-party payroll software. How would you use QuickBooks Payroll for job costing without necessarily having to use internal QuickBooks features? I have another video on just the reports where I go a little bit more in depth on the basic reports that are shown here. And then the certification materials, again, you're going to get an email with this. These are actually really, really good. If you are not advanced certified yet, I recommend especially the most recent Job Costing Supplemental Guide, Module 4. That one actually walks you step by step through everything, step by step through job costing, to progress invoicing, step by step through retainage, managing retainage, on work in process. I mean, the construction world is actually ever growing in complexity. So that's really important. And in the slides, I have this slide that shows you what's available in each feature broken down, each version of QuickBooks broken down by feature. That's actually a really good cheat sheet to have to understand job costing in the entire world of QuickBooks. Anyway, I'm done with my part. The next couple of episodes in 2 weeks, September 8th, we don't have the exact topic yet. Michelle's going to do that one because I'm out for tax season. Then on 9/22 or October 6th, one of those two, we will have the What's New on QuickBooks Desktop 2017, depending on when it comes out. So if it comes out on the 21st or even the 22nd, we'll do it that day. If it comes out after, then we'll do it in October. Anyway, let's continue the conversation in our Facebook group or in Michelle's LinkedIn group, which has over 160 something thousand members. There's about 3,000 members of the Facebook group, and it's a very tight group. Everybody helps each other. So let's continue the conversation there. And that's good for me. Thank you very much for attending. Michelle, any last thoughts?
Nope, just thank you everybody for attending. It's good to see you here, and I hope you join us for the next QB Power Hour.